Why are the $10 XRP debate refuses to die? For years, one of the most heated debates in the cryptocurrency space has centered on a single question. Can XRP realistically surpass $10? Critics argue that market capitalization limits, historical price ceilings, and competition make such a move nearly impossible. However, according to crypto educator Jesse, founder of Apex Crypto Academy, this argument misses some crucial factors that most investors and commentators fail to consider. At the time of the discussion, XRP trades around $1.84, which seems far from double-digit territory. Yet, Jesse believes that focusing solely on price history and static market cap math ignores how value actually flows through global financial systems. So in this video, we are going to break down what skeptics are allegedly ignoring, explore XRP's role in institutional settlement, and examine whether a $10 XRP is unrealistic or simply misunderstood. So, why do many believe XRP can never reach $10? The belief that XRP cannot surpass $10 is largely rooted in traditional market cap calculations. Critics often argue that for XRP to reach double digits, its total valuation would need to balloon into the hundreds of billions of dollars, numbers they consider unrealistic based on past performance. Another major reason behind this skepticism is historical context. XRP has not sustained prices above $3.84 for nearly a decade. To many investors, this past ceiling feels like a permanent barrier rather than a temporary limitation caused by market conditions, regulation, or incomplete adoption. However, Jesse argues that this mindset relies on static thinking, assuming the future must mirror the past. According to him, such reasoning fails to account for how XRP is designed to function within global finance, not merely as a speculative asset, but as a high-speed settlement tool. So, why is comparing XRP to Bitcoin a flawed approach? One of Jesse's strongest arguments centers on how people compare XRP to Bitcoin. Bitcoin boasts a multi-trillion dollar market presence, yet its actual transaction throughput is relatively small when compared to traditional financial systems. Bitcoin is widely viewed as a store of value, similar to digital gold. It is not optimized for processing massive daily transaction volumes. In contrast, central banks and financial institutions move trillions of dollars every single day, far exceeding what Bitcoin settles in an entire year. Jesse argues that implying Bitcoin's valuation framework to XRP creates artificial limits. XRP was never meant to be digital gold. Its purpose is to move money efficiently, cheaply, and instantly across borders. Judging XRP by Bitcoin's use case ignores the fundamental difference in design and intent. So, how does transaction scale affect XRP's valuation potential? Unlike speculative assets that rely on hype cycles, XRP's valuation thesis is tied to payment throughput. Jesse emphasizes that value doesn't just sit idle in global finance, it moves constantly. If XRP becomes embedded in systems that handle high frequency, high value transactions, then price models based purely on circulating supply become incomplete. In such systems, liquidity velocity matters just as much as total supply. This means XRP does not need to be hoarded to increase in value. Instead, its price can reflect demand for liquidity, especially if large institutions rely on it for settlement. So according to Jesse, this dynamic is what many $10 skeptics fail to consider. So, why is institutional settlement Ripple's biggest advantage? Ripple's long-term strategy has always been focused on institutional integration. While many crypto projects chase retail investors, Ripple has spent years developing banking-grade infrastructure for cross-border payments. Jesse highlights that XRP's real advantage lies in its existing relationships with financial institutions and its potential role as a settlement asset. If banks, payment providers, or even central banks adopt XRP as part of their liquidity systems, transaction volumes could scale far beyond what most market cap models anticipate. This isn't about hype-driven pumps. It's about infrastructure level adoption, which often develops quietly before becoming visible in price action. So, what role do central banks play in the $10 XRP argument? Another overlooked factor is the sheer number of central banks worldwide. Over 108, 170, over 170. Jesse argues that focusing on just one country or one financial system severely underestimates potential demand. Even partial integration across a fraction of these institutions could generate enormous liquidity requirements. In such an environment, XRP's role as a bridge asset could become increasingly valuable. Jesse also rejects the idea that XRP's valuation must remain low simply because it has been in the past. Financial systems evolve, and pricing models must evolve with them, especially when dealing with global scale settlement assets. So, is market capitalization an outdated metric for XRP? To reach $10 from current levels, XRP would need roughly a fivefold increase, pushing its market capitalization toward $600 billion. While critics view this as excessive, Jesse believes this calculation ignores liquidity cycles and velocity. Market cap assumes value is static, but in real-world payments, money is constantly moving. If XRP is used repeatedly within short time frame to settle large transactions, its effective utility can exceed what static models suggest. This perspective reframes XRP not as a speculative token but as a financial utility where price may lag behind adoption before eventually catching up. So, why might XRP's price lag behind real-world usage? Jesse maintains that XRP's purpose is transactional rather than speculative. This means adoption may occur quietly, with price appreciation coming later. Investors who rely solely on historical price action may miss the shift. Just because XRP hasn't sustained double-digit prices before does not mean it never will, especially if its role in global finance expands. That said, Jesse acknowledges that not everyone agrees. Some observers remain cautious, citing XRP's long consolidation period. Others point to institutional accumulation and ETF activity as potential catalysts that could influence future valuation trends. Finally, my own personal opinion about this is that the $10 XRP debate highlights a deeper issue in crypto investing. Most people still evaluate utility assets using speculative frameworks. XRP is not designed to behave like Bitcoin or meme coins. It's built for financial plumbing. That doesn't guarantee $10, but it does suggest that dismissing the possibility outright is short-sighted. If institutional settlement adoption accelerates and if XRP becomes embedded in high liquidity systems, then today's valuation models may look outdated in hindsight. Ultimately, XRP's future price will depend less on hype and more on real-world usage, and that makes it one of the most misunderstood assets in the crypto market today. And this finally ends our video. Thank you very much for watching and see you on the next one.